3, 2, 1, go. There we are, Anthony. We're live once again. Back for our weekly miner Q&A, you guys, but we've got a lot more to go through in today's presentation. Obviously, a very active week in the mining space for earnings. We've got April production results and a number of big announcements. We've got CleanSpark, Marathon, Cypher, Riot, a lot of the heavy hitters in this sector with big announcements and big numbers coming out this week. So, Anthony, welcome back. How are you doing, buddy?
All good, mate. All good.
Good. You were doing a little traveling, eh? You were at the AIM Summit and then went down to meet a private mining company, I hear, the other night. Can you hear me, Anthony? Yeah? Okay, great. AIM Summit, how was that? Can we get a quick update for the viewers, Anthony?
Yeah.
There, we can hear you now.
I'm getting it. Sorry, just give me a second. Can you hear me okay?
Yeah, coming in good now, buddy.
Sorry. Yeah. No, the AIM Summit was fantastic. 2 days in London. First day is like the geo, political, macro, all that sort of economic scale, the big sort of heavy economists on the stage. Day 2 is all about the crypto mining, other alternative investments. 10 of the mining companies were represented there. So, it'd be easy to say which ones weren't there. So IREN weren't there. Who else was it? IREN, Soluna, DMG.
Testing your memory this morning.
I think everyone else apart from those. There's only 5 missing from our analysis. So no, it's a great. And I've been to some of these conferences before, and these are the ones that the mining companies go to. You've got family offices there, you've got investors there, so this is where, they're looking at alternative investments to put their money to. And so 2 great speeches from Fred Thiel and from Marathon, and also from Frank Holmes from Hive. And then there was 3 or 4 panels with the miners on there. So we had, really good panels, including the likes of Sam Tabar from Bitdeer Digital, Jason, Les from Riot. Also, there was Sue Ennis came on for Hut 8 on a panel as well. Ben Gagnon, who we've had on the channel, we like Ben. So really some big hitters and putting the message out there about Bitcoin, put out what they're doing at the moment. Some interesting conversations about the HPC AI space at the moment as well. So really good, and it gave me the chance to sort of meet some of them for the first time as well. So I had managed to meet Adam Sullivan, the CEO of Core Scientific. Had a really good conversation with him. Jason was there. Jason brought me a Riot hat, so maybe I should be wearing that today.
There you go.
No, it was really good, and also that there was interesting. There's a few people there that follow the channel, so that was good as well. So big shout out to the people. I go to some of these conferences and I'm always getting asked for photographs and sort of like more updates about the mining sector. So yeah, it was really good, really useful.
Great. Yeah, it's nice to hear so many of our analysis members are represented there, Anthony. Really looking forward to Nashville. So in terms of upcoming travel, Anthony and I are going down to visit the Core Scientific and the new Corsicana facility in June. So we'll try and get videos out showcasing both of those facilities. And then we've got Bitcoin Nashville in July. That's going to be the big one for the year. That's the first main conference that we're both going to together. So we're looking forward to that one as well. If any of you are going, more than happy to meet up there, go for a beer or coffee or whatever we feel fit. Now, I just saw a comment in here from Manuel, Anthony. The miners are taking a bath today. They certainly are. The day looked pretty solid. CleanSpark was up, I think, 7% at one point. Now we've got Marathon down nearly double digits. So we'll talk about that in a second. We're going to actually move into some of the analysis here, you guys. So we brought together a little bit of a presentation. We're going to go through 8 slides, a couple minutes each. Anthony's put together some of his comparative charts. So we're going to analyze the earnings we've seen from the big 5 miners really by market cap this week. Then we're going to get into your Q&A. So make sure you guys get your questions in there. Get the like button going here. Smash the like for us. We're going to get as many people in here as we can, hopefully around 100 before we get into the Q&A. So Anthony, let's kick it off with Bitcoin price. The 200-day moving average, this came up, hit an all-time high just recently here. Bitcoin price, obviously, volatility is in the name. what are we seeing long term here from a big picture in terms of the fundamentals for Bitcoin price?
Yeah, I mean, this takes every day it looks at the previous 200 days, so it's an average, an average price there. But you can see certainly, and we've talked about this. If you look at from January 2023, when Bitcoin in the previous month had dropped down to effectively $15,000, that was as low as we've seen in this sort of cycle, and then we've just seen the Bitcoin rally. It rallied 155% during 2023, and it's already up again, 50-60% in 2024. So you can see, a day like today won't impact the 200-day moving average because there's 200 prices, and today is just one price. So it's only going to be like 0.5% of the total. And then you go look at the price differential over that period. So at 60,000 or 60,800 as it is at the moment, it's still significantly higher than most of the previous year.
Now,
so
Anthony, where that gets interesting, and I know you're going to talk about that as we get into your analysis, the high watermark for Bitcoin was set in Q1. So if we continue to trend down or in this 60,000 range, we're going to see the opposite effects of FASB next quarter. Hey,
we are, and we'll come on to that when we go through the earnings, because I want to put that piece together with the earnings there. But even at 60,000 today, this line is still going up. It was only 42,000 in January. So January the 1st, 42,000. We're at 61,000 today, even after this drop of 3%. So as long as it's maintaining, over 60,000 here, this line keeps on going up because it's still significantly higher than most of the days over the last 200 period. But yeah, we know Bitcoin's a volatile space to be in. So this is one of those days, and just got to sort of ride through it. We had this in 2021. Bitcoin price was going, significantly more volatile than it is today. It was going up 10-20%. I mean, we all remember when Elon Musk decided to buy some Bitcoin, the impact that had there. So, we just got to ride through it. But the underlying fact is that the ETFs have been buying the Bitcoin in the US. They're starting to buy it in Hong Kong, and there doesn't seem to be any real let up on that. You're just going to have days where you have some red days. But when we come on to the difficulty, that will explain things a bit more clear as well.
Sure. Well, let's get into that then, Anthony, and then we can get into the actual miner discussion here. Yeah, seeing red across the board here today, you guys. These were the interviews. So we just got a question or a comment about our core interview yesterday. These were the interviews that were completed this week, you guys. So we had Gryphon talking about April production, Riot talking about Q1 numbers, Sheldon and team from DMG talking about production, and then Q1 earnings from Core Scientific with Adam Sullivan yesterday. So a very busy week. And then next week, you guys, I encourage you guys to go out, take a look at these if you haven't. Next week, we've got Bitfarms on Monday. We've got Hut and Bitdeer on the 15th, Soluna on the 16th, TeraWulf on the Friday, the 17th. So that's going to be an interesting one. We'll see where the Wolfpack's at for that. And then on the 21st, we've got Bit Digital. So we've also reached out to IREN, Anthony. We're going to try and get them in here at some point. But a very packed schedule. If you guys have any questions, feel free to reach out, and we'll make sure we get those asked to the CEOs. Now, moving along here, Anthony, we talked a little bit in our last live podcast about hash price. So obviously we saw that big spike after halving, as we saw runes and the transaction fees really go crazy. Now we've started to level off back in that 50 range. However, we have been slowly creeping up over the last couple of days. So what are you seeing from a hash price perspective right now?
This is where we, pre-halving, this is where we expect it to be around the 50 mark. If you think about pre-halving, for that sort of like a few weeks before then, it's between 100, 110. We know the rewards have halved. We had some, great few days after the halving with regards to transaction fees, with the outcome of these runes that were being printed onto the blocks. And that was great for the miners, and gives them extra money. Then we saw us settling down, and this hash price dropping down into the 40s range really meant it was unprofitable for probably a lot of mining machines. And we've seen some machines come offline because the difficulty recently changed by yesterday by 6%, and so there'll be a little bit of a steadiness now as these less efficient miners come off there. It's positive for the big mining companies who've got the most efficient miners because they're not going to switch off. And I can tell you now that I spoke to one miner at the AIM Summit, and they said it'd have to get down to 29 before they started switching off. So we're still a long way away from that there. So it's where it is. I mean, everyone would have liked the transaction fees to go on for longer, and maybe there's the transaction fees play a bigger part in the months to come. That the mining companies will want to still maintain profitability doing this, and we've seen earnings coming out in the week now, and it's been very positive for some of these miners. They'll want to show that in the next quarter and the following quarters in 2024 that they can still produce profitable numbers.
Yeah. Well, and what's really interesting about this profitability discussion, Anthony, the next slide we have here looks at the global hash rate, and you can see exactly what you talk about, that hash rate pulling back from the mid 600s, now getting close to the 550, 580, 590 range as those less efficient miners get unplugged. But what I thought was really interesting from Adam Sullivan and Core Scientific yesterday is he said at their new Phoenix facility, not in Phoenix, the name is just Phoenix, they're actually setting up some of the older S19J Pros, and they understand that they're not the most efficient and they're not the most profitable at all times. But because of the ERCOT balancing in Texas, they're able to only switch on those facilities at profitable times when energy prices are super depressed. So I thought that was super interesting. We also asked Rob Chang from Gryphon about in 10 years, where does he see the Bitcoin landscape? He said a very similar thing with power companies just having a room where they would have Bitcoin machines, and if they aren't able to get rid of the power, they're just pumping it into the ground. Maybe they fire up the machines for a couple hours. So very interesting to see how this landscape evolves. And then obviously that relates to the transaction fees, looking out longer term. Where are the revenue opportunities for these companies? And obviously that's why we get into HPC and AI and stuff too. But really interesting, Anthony. And like you always say, this industry's only been around a few years, so we're seeing it in the creation here. Now the next one talks about that difficulty adjustment. So I'll leave this one to you, Anthony. But pretty well understood that this was the expectation after having, eh?
Well, go back 3 months ago, and there was an expectation from some of the big analyst companies in New York, the JP Morgans of this world, and the Cantor Fitzgeralds, that difficulty was going to drop by 25-30% post-halving, and it never really happened. It's dropped by 6%, so that's a start. But even looking today at the global hash rate, so the global hash rate dropped to 450 a couple of days ago, and that started to give the impression that a lot of these inefficient miners, where the energy price was probably a little bit higher than the 5 cents a kilowatt hour, meant they weren't mining profitably and therefore had to be switched off. We started to see some of those numbers coming through there, and the difficulty was taking longer for miners to mine a block. So when the mining machines come off the network, it means less mining machines means longer to actually complete the task of finding a number. So it got to the stage where it was like 10.5 minutes to mine the block, and it should take 10 minutes. So the difficulty every 14 days acknowledges how long it's taken on average and then resets to get it back down to 10. So to make it a little bit easier for the miners. And what we see now is, again, it's only a day after difficulty. We've seen a little bit of a surge again in the actual global hash rate, back up towards 650 exahash. So from 450 to 600, that's like a 50% increase. It's not what the mining companies were expecting. So again, there might be a little bit more pain before we see effectively the most efficient miners only on the network. It might be that people believe the Bitcoin price is going to rally, and they're prepared to mine at a loss now, knowing that they'll get Bitcoin that they can then transfer in the future and cover some of the costs they've incurred going through that process and still come out with a sort of like a, with a profit. So, mining is in a sort of a loss leading way at the moment, not selling the Bitcoin, letting the Bitcoin appreciate in the hope that it goes up from its current position of between 60 and 61,000. And then, if the Bitcoin price gets to say 80, 90,000, they can then sell. They've covered their costs then to do it. That's my personal view. I might be 100% wrong. But if to mine at this level now with the hash price index at 50, you've got to have really efficient miners, and you've got to have a low cost of energy. So, from my perspective in the UK, zero Bitcoin mining. I don't care where they're doing it. They might be doing a Sundance or something like that. There's no mining of Bitcoin in the UK. Prices are just too high here. You might look at some of the Scandinavian countries. There might be elements there, obviously, and obviously North America, where you can get prices closer to the 4 to 5 cents a kilowatt hour. We know some miners get even less than that, and some miners in Texas are benefiting from these price differentials, where when the price drops, and in some instances, and we know that IREN have articulated this in many of their updates, they've sometimes mined the month literally without an energy cost because they've been able to mine for free, and so that's an opportunity for some miners in Texas to take advantage of that. But the offset to that is, because to do that you have to curtail at certain times. It means that you impact. There's a sort of like a playoff between production and cost. So you might not be producing as much Bitcoin as every retail investor who follows these companies believe they should be doing, because there's enough data out there to calculate how much a miner should be mining on a daily basis. And when we see some of these numbers come out on a monthly basis, we scratch our heads sometimes to say, why is that company mine, 100 or 200 or 300, or in case of some miners, like, 400 or 500 Bitcoin less than we expected. And, there's a whole host of reasons, and especially some of those Texas miners where the production may not always be as high as you expect. We then wait to see the earnings reports to determine actually was there some benefit in switching off and getting low price energy. And Jason's articulated that on 2 podcasts in the last 3 months. So he's got the biggest site in Texas. They have a PPA agreement for literally just under 4 cents a kilowatt hour, and he articulated quite clearly there's times there where they'll switch off, be able to do something with that energy, sell that back to the grid, take benefit of the cost savings of the transmission fees and a whole host of other things, and end up finally with a really low price. And in 2023, I think they quoted something like 2.2 cents with all the benefits they'd incurred by doing that strategy. 2.2 cents is probably, I'm going to say, it's the cheapest of all the public miners that we saw. We know that Cypher's not too far away behind, and TeraWulf are up there, but 2.2 across a year was significant.
Yeah, the other number you just threw out that I haven't heard before, Anthony, is that $29 hash price, where the threshold is to kind of cut off. I haven't heard anyone give us a threshold in terms of hash price before. But one thing I'll say, certainly a dynamic environment.
I'm not going to put them on the spot, but that was in a conversation, and so it gives you an indication that we didn't see any miners switch off in December 2022 when the Bitcoin price dropped to $15,000, and that was significantly low then. I mean, to mine a Bitcoin, you wouldn't be able to mine a Bitcoin at that stage for 15,000.
Well, the one thing I will say though, Anthony, you can only mine at a loss for so long, right? Especially if you're a smaller mid-sized company. So
absolutely, and I don't think the public companies, they wouldn't be sort of gambling on what the price of Bitcoin would be. Although I suppose you could argue that the ones that hodl are gambling, to a certain extent. But the non-public miners that we don't hear about, and they make up a significant amount of the network, they'll be making, probably different decisions to these public miners. Public miners have got responsibility to shareholders. So at the end of the day, they'll be, we've seen the earnings this week come out, and there's been some, really good numbers, and they'll be keen to make sure that next quarter they can show some equally great numbers. But we'll come on to that in a second.
Yeah, well, that's a great segue, Anthony. Why don't we move into that? So I'll make this large for you guys to see while we start talking here. Basically, what you're looking at is the most recent quarter from the top 5 public miners in terms of market cap. CleanSpark, this was Q2. I believe the others was Q1. Correct me if I'm wrong there, Anthony. Why don't you walk us through what we're seeing here? Generally, very strong numbers. We expected this quarter to be super strong. We had very high Bitcoin price during the quarter, and it was the last full 3-month period before halving. What are you seeing from a high level in terms of earnings right now, Anthony?
Yeah, I mean, it's interesting that the first 5 miners to produce earnings reports in May, you've got effectively 4 of the largest miners by in terms of exahash. So with CleanSpark at over 17, Core Scientific over 20, Marathon close to 30, and Riot close to 13. But in terms of market capitalization, you've got 4 of the 5 as well, because Cypher actually at the moment their market capitalization. This is, bear in mind, I'm not taking into account today's change. I did these charts this morning when the Bitcoin price was a little bit greener. I think we're over 63,000 at the time I did these charts. But their market capitalization is over $1 billion, 1.1 billion at the time of doing these charts. So they were the 4th largest miner by market capitalization in North America. So to have 5 in the first week is really good. You can look straight away from the revenues, and this will be this won't be anything new, no surprise to anybody in the fact that Core Scientific had the highest revenues in Q1. They mined the most Bitcoin in Q1. They've also got a hosting business as well there with about over 6 exahash. And so $179 million in revenue there. Marathon should have had the highest in Q1 with effectively nearly 30 exahash in the 3 months, but we've highlighted their production issues there, down to poor machines, down to loss of power at certain sites. Just real, I don't know if it's bad luck or whatever, but it's been quite a challenging period for them. That you want to get as much Bitcoin as you can mine, because what that does is it reduces your cost to mine a Bitcoin in terms of your overheads, because the energy to mine 10 Bitcoin in terms of if you're only mining 10 Bitcoin is in fact the same to mine 100. It's just it's 10 times more. You're not if they've only mined 3,000 Bitcoin, they don't get paid. Not paying for 4,000, they're paying for the energy they use. So it's a variable expense to the miner, but their overheads, so that all the other costs, the labor, the G&A, the salaries, the bonuses, all that's looked at and divided into the Bitcoin that they do produce. And if you're producing, should have produced probably at least maybe 1,000 Bitcoin more than they did, they would have had a really strong position on Bitcoin there. Now, we expected some really green results, and the reason we expected the green results is because of the FASB changes to valuing a fair price for Bitcoin. And 4 of these miners hodl Bitcoin, and they were able to significantly benefit from this. The one miner that doesn't hodl Bitcoin, and we had Adam on the podcast yesterday, and he was very open, transparent. They have to sell their Bitcoin within a 10-day period from the dates mined, and then once it's been sold, they're literally free to do what they want with the actual funds. But there is an agreement there that that Bitcoin sold, and I'm assuming they would sell pretty much like some of the miners on a daily basis and make use of the funds.
And I thought that was interesting, Anthony, that they're mandated to sell the Bitcoin within 10 days, but then they can do whatever they want with the money, because generally Bitcoin and money are pretty interchangeable. So that was a little interesting to me, but you're exactly right. You can see on this chart, you guys, Core Scientific under the gain on fair value of Bitcoin, 0, because they don't have a hodl. And Anthony, that's the line that is really interesting for me, is if you compare that gain on fair value of Bitcoin, second line from the bottom, to the total revenues and the net income lines, you can really see where the where the majority of these earnings came from for these companies, hey?
Oh, absolutely. So, in terms of the gain on fair value Bitcoin, if you look at that number and look at the net income number, that gives you an indication then of how they did if they weren't able to use the FASB rules. So if you look at Cypher Mining, they would have had effectively a $600,000 net loss if they weren't able to make use of the FASB rules. CleanSpark would have had a 7 million net income. Core Scientific, although they weren't able to use the FASB rules, as if you remember, Adam said about the debt, and they were able to do some reorganization of certain items which give them a benefit financially from an accounting perspective. And so by doing that, they got effectively like a one-off gain of 111 million. So again, if they hadn't had that 111 million, they would have had a net loss. Marathon, I mean, if Marathon hadn't had the gain on their accounts, they would have had $150 million loss. And this is what I go back to again. It's like, the lost revenues that they obviously weren't able to achieve. We looked at that December month there, 1,853 Bitcoin, and they've achieved about 3,000 in the first 3 months of 2024. Riot, again, another miner that would have had a net loss for the first 3 months had it not been for the FASB rules. And it's worth noting that this is like a sort of like a real catch-up quarter for these miners. The first 3 months of 2024, they're all implementing these new rules for valuations on the crypto, and you do this at your peril because the Bitcoin price now is 61,000. The Bitcoin price at the end of this quarter was about just over 70,000. So if we're only 8 weeks away, 9 weeks away, seven weeks away from the end of Q2.
Basically halfway through.
We're halfway through.
Yeah.
Now, the 10th of May, we've got about another 50 days to go, and then we're at the end of Q2. So if the Bitcoin price is as it is at the moment, 61,000, these mining companies that have got a hodl will effectively be reporting a net decrease in valuation of $9,000 per coin from what their hodl is at the moment.
And we would need a fairly good move, Anthony, to bring that up enough to get the average back to 7. Like we'd need it in the 80s. Eh?
We haven't even discussed what do the earnings look like. Forget the FASB. If some of these mining companies were just barely breaking even in that quarter, what's it going to look like in Q2?
And that's the $1 million question, Anthony. And that's
the cost. And we've been asking mining companies. We ask all the CEOs when they come on the channel. Tell us your cost. You've been very good at trying to get the information out of them, Bryce. I know you've been questioning them. What was your pre-halving cost to mine? What's your post-halving cost to mine? It's not rocket science to do this. If the Bitcoin price is fairly level and the global hash rate is fair level, you're looking at a 100% increase in the cost to mine a Bitcoin post the halving. There are some sort of variables that can change. So these mining companies are getting more efficient machines. Some of them are underclocking machines now. So those two elements there, which are different elements, can bring your cost of power down to mine. And it was great to hear Rob Chang talk about this from Gryphon Mining perspective, lowering the dial down on the mining machines and getting a cheaper cost and more efficient rate. And in DMG's update this month as well, they're doing exactly the same. They've brought in the S21s. They're not going to use them at the full maximum. They're going to bring them down because they've tested these machines. They know that there's a sweet spot where they can use, I think it's about 85%, and they get a really good level of efficiency and a really good level of cost. And I think some of these miners are going to have to start being really clever in the way they use their mining fleets going forward. If the Bitcoin price rises to 100,000, everything I've just said in the last 10 minutes is absolutely void, null and void. And Anthony, go start looking for another job somewhere. I'm sure there's something out there I can do because I've almost lost my way in this way. But I'm just giving you the cautious update, the fact that, although the Bitcoin price is up 50% since the start of the year, it needs to sort of like rally. And in previous cycles, it has rallied, 3, 4, 5 months after the halving. So there's no reason why it can't now. We've just had a massive ETF inflow over the first 3 months of the year, and that will benefit. But I just want to add caution. The FASB rules are great when the Bitcoin price is rising. When it doesn't rise and it starts coming down, these companies will be showing these losses, albeit unrealized losses until they sell, but there's still a loss in the accounts, and that will affect their net position. So great to see these numbers, because these numbers, if you haven't looked at previous quarters, these numbers are fantastic, and I did articulate quite a few podcasts ago that, I was expecting really big numbers from some of these companies, because I could calculate what the changes were. It's not that difficult. Once March had finished, I knew what the price of Bitcoin was. I knew what these companies had a hodl. You can do the maths in literally about 5, 6 seconds.
Well, and if you look at the basic income per share for some of these companies, 91 cents in a quarter for Core Scientific. They're trading at $3 or $4. Marathon $1.30 in a quarter. If they were able to continue this for a year, they'd be looking at $5, $6 annualized per share, right? And they're trading where double digits. So
one thing I'd like to highlight on there is, obviously I've put in some of the non-cash adjustments. So, these are costs that are incurred on the income statement. So these are true costs. Depreciation is a true cost. Stock compensation and the gain and they're all true costs. But then they're non-cash costs. So there's no physical money transferred to get these numbers. But when we had Jason on the podcast earlier in the week, I know that you asked, some of the more challenging questions. We raised the stock compensation, and he explained about the process there. And you can look at, again, this is for a quarter, so it's not the whole year position, but you're looking at there 4 companies that have issued stock compensation. Core Scientific didn't issue any stock compensation this last quarter. Not to say they won't for the rest of the year, but obviously they've chosen not to in the quarter, and there might be some reasons behind that. But you can see from the other ones there, I'm looking at the Marathon one there of nearly $52 million in stock compensation on revenues of 165 million. That's a 30%.
Well, and we'll have to reach out to Fred there, because Jason told me, Anthony, for Riot, the 32 million was for all the employees for the next 3-year bonus or short-term incentive program. So he said the way that works is you actually have to book it up front, assuming a maximum payout. And actually, a really good question in the comment was, Anthony, you had brought up some of the metrics from the last time they did this, right? 500 million EBITDA. And there was another one. And one of the questions was, why didn't they just roll that money over into the new bonus if they didn't meet those? So I thought that was an interesting take, but we'll have to dig into the Marathon and understand if that's
and
true.
also when you say, and agreed, it does, it is for a period, but if they're issuing this amount every quarter, does that mean that
it sounded like they weren't? It sounded like this is it for the
so if this is the one big quarter that they use, then we'll see what happens the rest of the year. But
sure.
It'll be something to watch. Yes, things are great when it's green, and as I say, the FSB rules have really helped some of the miners with the hodls. We're going to get some miners coming out this month now that don't have significant hodls or zero hodls. So we're going to have on the 15th IREN's results and TeraWulf's results come out. So it's going to be paying attention to those, because that will give you a real indication. They've not benefited either way at all. They sell a Bitcoin on a daily basis. So this is pure mining. So, that can they achieve a profit just doing what they do and not having to worry about any outside influences that will affect their earnings. It's just a case of, the money comes in, the money goes out to pay for things. And so we'll look at those results with a bit more due diligence when they come in.
Yeah, it'll look a little bit cleaner. And curious here, and feel free to comment as well, you guys, if you know. I'm wondering, Anthony, if these companies knew that Q1 or this quarter was going to be very strong, so they purposely put a lot of these big non-cash expenses in, or if just it's the first quarter of the year and that's when they do their budgets. The interesting thing for me, though, is for CleanSpark, it wasn't the first quarter of the year, it was Q2. So I wonder if maybe they're moving around, especially in Marathon's case, loading up this quarter with some of these costs just so they don't have to incur it Q2, Q3, Q4 when maybe they know things won't be as rosy. But
maybe that's a good point. So it's a good point to come out with, because
I know we used
I don't think any miner is going to have as good. These were record income levels for a quarter for most of these miners. Record.
Oh yeah, I know we used to do that in the corporate world. Hide a couple costs here and there where you knew you'd have a little bit of wiggle room. Now, final slide, you guys. Then we're going to get into the Q&A. So make sure you get the questions in here. This one, Anthony, looks at the balance sheet specifically. Obviously, we've talked extensively about the balance sheet, the importance of this going into halving, the flexibility it provides in terms of M&A and the levers that can be pulled as needed in this post-halving world. What were the standouts here in terms of comparing the balance sheets of these big five?
Yeah, I mean, one thing I've noticed is a lot of the miners now are making sure they've got really good amounts of liquidity on the balance sheet. So, strong levels of cash and cash equivalents. Those that are obviously hodling Bitcoin, there's a distinct group now. There's half literally hodling and half are selling on a daily basis. So 4 of these miners are hodling, effectively not selling all their production every month, so increasing their hodl. And we've seen that, CleanSpark have done that to an art, really. They've just literally been selling very little Bitcoin over the last sort of 7 or 8 months. I mean, you go back a year ago, I think they had under 400 Bitcoin, and now they're at sort of like, heading towards 6,000 Bitcoin on the balance sheet. So the current ratio, anything above 1 is positive, because basically what the current ratio says, over the next 12 months, have you got sufficient current assets on your balance sheet to meet your current liabilities? And current assets are those assets that are determined that can be actually liquidated and sold within and actually occur within a 12-month period. And the liabilities are also the short-term liabilities that need to be paid within the next 12 months. So straight away, looking at this here, you can see that the ratios are all above 1 for every company. Now we know the Core Scientific came out of Chapter 11, so of all the companies, the challenge would be for them to still have a strong balance sheet. Bear in mind they had over $1 billion of debt when they went into Chapter 11, but they're coming out with a story now, and we've had Adam on the podcast twice in the last couple of months there, and really I'd really get people to have a look at those podcasts, because one thing about Adam is he's really good at explaining what's going on in Core Scientific and what they went through and what the shareholders have got. I had 50, 60 DMs about, what do the warrants mean? I've got these shares in Core Scientific. What's warrants? We got Adam on the podcast and he articulated that. What does the debt mean, Anthony? How are they going to get rid of that? Adam explained exactly the process of how they're going to do it. And actually, when he explained it, and I said to him before the podcast, I said, Adam, can you explain this as if they were like 12-year-olds? Because, what you put out there, I'm an accountant. I had to read it twice to start getting it a little bit. And I'm an accountant with, qualified for 30 years.
But he did a really good job, Anthony. He dealt it down. And I was going to do the same thing here with these, actually. So the current ratio, like if you're looking at Marathon, for example, that basically means they could pay off the next 12 months worth of liabilities 23 times.
Yeah. Now, actually, in normal businesses, if you had a current ratio of 23, that's as bad as having a ratio of less than 1. Because what it means is you're not utilizing your actual current assets. Now in the Bitcoin mining space, we're not going to say that, because Marathon have got a war chest. And a war chest means they can move at a moment's notice and do things that other miners can't do. $1.6 billion in current assets as at the 31st of March. That's a significant war chest. So if they see something that start to occur now post halving, where maybe some of the non-public miners, and we can talk, maybe some of the questions come through about, miners buying public miners, and we've had a discussion more. I'm happy to reiterate that. Having spoke again at length to some of these miners in London and getting their understanding, I can sort of emphasize some of those points there. But there might be some sort of non-public miners, or there are facilities that become available because it's going to be challenging times going forward. And we've just seen the update from CleanSpark yesterday. Buying those sites in Wyoming gives them the opportunity to get another 4 exahash plugged in when those sites are completed. So, having that money on the balance sheet gives some of these companies, the chance to move things instantaneously. And you probably need to do that. If you're having to start thinking about raising money when you see an opportunity, you're already probably too late.
Yeah.
These mining companies, we spoke to Rob from Gryphon Mining, and he explained, he's spending 70% of his day looking at potential M&A. And if you think they're arriving on Rob's desk, you can bet your bottom dollar they're arriving on everyone's desk. It's not like one miner's going out there. I was in Amsterdam last October, and there was issues with one miner then, and the 5 of those directors from different mining companies said, "Yeah, I was aware of that. They'd heard there was a miner in trouble, and they were looking to offload some sites." It didn't just go to one; it goes to they'll want to try and have as many conversations to raise, if they're going to have to sell sites to raise capital very quickly. And it won't be a case of just going to one miner. They'll want to try and get the best deal they can. So, they'll reach out to everybody and say, "Look, we've got a facility for sale here. If it meets your requirements, let me know what you're prepared to pay for it." If you go down to one.
Anthony, I've noticed this week kind of a trend with these interviews. The companies that have the big single locations, right? The Corsicanas, the IREN, they're not very worried about M&A. And as the Core Scientific Adam said yesterday, we both got a good chuckle. He said basically his hardest job this year is finding cheap machines and plugging them in. And I thought that was so interesting because there's no wonder Rob's spending 70% of his time. These smaller companies, they've really got to come up with some creative ways. They don't have.
If a miner was, so if a non-public miner was out there, and they've got, some of these non-public miners have got 2, 3, 4 exahash. They're bigger than some of the public miners. The fact they've not gone public, there's a whole raft of hurdles to go to become a public miner. Rob said it took 2 years for him to become public. It's not something you can do overnight. Some of these non-public miners might be, looking to realize, actually, we're not going to make it in this cycle. We're just going to offload our machines, offload our sites. And there's potentially like a fire sale. And then, you'll get the miners circling then to say, well, I'll take some of those mine machines off you, but this is what I'm prepared to pay for them. Maybe, offer them a fraction of the price. And those are the types of acquisitions that, these miners will be looking at. There'll be none of this and we've heard from other people on YouTube. I mean, it makes me chuckle, really does that. As soon as Bitfarms announced they're going to 21 exahash and Marathon are going to 50 exahash, that they start putting together 21 and 29 and coming up with 50 and saying Marathon's buying Bitfarms and there's lots of value in there. It just never going to happen.
But Anthony, 21 plus 29 equals 50 perfectly.
It does, but it's never going to happen. And actually, I had a lot of time with Ben Gagnon in London, and I also had some quality time with Fred Thiel, and I asked the same question to both of them, and they just sort of smiled I said, this is what we're up against. You put out these numbers, and people start putting 2 and 2 together and coming out with 3 million, it's just we've explained before. If you're buying Bitfarms. And Bitfarms' market capitalization at the moment is around about, I'm going to say about 700, just under 700 million. When you start buying shares in that company and then articulate the fact you're going to buy them, you're going to pay a premium. That premium is going to be 30, 40%. That takes that price to $1 billion.
Yeah.
And Bitfarms at the moment have got 7 exahash. Now we know CleanSpark have bought these sites yesterday, and what have they paid for them? And in terms of that's 4 exahash, and they can buy the mining machines at $14 to $16 a terahash. So for every exahash of miners, it's going to be, say, 15 million. If they want to buy 7 exahash of miners at 15 million exahash, that's $105 million in mining machines. If they want to buy the facilities, they're about, call it 10 million an exahash. That's 70 million. Add 30 million in to sweeten the pot, make sure everything goes rosy and cover all your costs. And, you're up to 200 million. If you want to start sort of looking at power as well like that, add another 50 million and that's 250 million. Why are you going out there looking at Bitfarms and prepared to pay $1 billion? It just, it's just not going to happen. And and if that happens, again, I'm walking away from this business and I'll start a milk round somewhere.
I'll get Rex Finance in here because he called it. He's the guy.
It was Rex Finance.
I'll replace you with Rex. Hey, Anthony, I want to get into some questions, but I know you put a lot of time into this sheet. So current ratio, a great one to look at. Are there any other lines or metrics on here?
So I've included the debt, and obviously Core Scientific's debt, at 655 million. That is, again, go to the presentation slides, relook at the podcast with Adam. He tells you how that debt's going to be paid off once their share price hits, I think, 693. Then there's a warrants literally, put into play. The money from the warrants covers the debt and also gives the company a little bit of a cash runway to do some other things there. So we've seen the Core Scientific share price rally in the last couple of days since results have released, and the results were really probably significantly better than people were expecting. Bear in mind, 4 months ago, there was still a question whether they were coming out of Chapter 11. And so, out of Chapter 11, led by, new management team and, looking really positive there. So I've included market capitalization. I've included the enterprise value. So the enterprise value looks at the market capitalization. It adds the debt. It takes away the cash. And because most of these miners have Bitcoin, I've also reduced the enterprise value by the amount of Bitcoin as well. And effectively, that's how you can compare valuations of these miners. So if you look at what are you getting for every if you're going to buy Cypher Mining, with the market, if you buy Cypher Mining at its market capitalization, you're effectively only paying $1 billion, because there is a Bitcoin hodl of nearly 130 million, and there's also some cash of nearly 90 million. So that's in the company. When you're buying the company, that's there. So you're effectively only paying $1 billion. Now, if you look at like the likes of Marathon, you're paying effectively just under 4 billion for the size of Marathon. Now, Marathon at the moment has got 30 exahash of plugged-in hash rate, not quite achieving 30 exahash at the moment. They're probably achieving closer to 21. I think it was 21.1 at the end of April. So only 2/3 of their hash rate is actually generating Bitcoin at the moment. But you'd have to pay 4 billion effectively for Marathon if you were only paying at the market capitalization at the moment. So a shareholder going into there saying, "What am I buying here?" I then look at like the debt to equity. And again, if we take out Core Scientific, because obviously their numbers are going to be skewed, the fact that they do have this debt on the balance sheet, they do have the plans in place, and believe you me, I don't think it'll be overly too long before those warrants can start being executed. I think if we see some rallies like we saw in the last couple of days, it might happen soon. I think they've got 3 years, but I think it would certainly be within that 3 years that happens. And I also looked at look at the enterprise value. So look at the value of the company and look at the hash rate they've got. And then you can look at the installed hash rate at the moment and the future hash rate, and look at the value. And this is the cost value, not a value as in a good thing. This is the cost value of their hash rate. So for every exahash of capacity that Cypher have, it's worth 130 million. And if you look at Core Scientific, for every exahash they have, it's worth 61 million. So the cost of that hash rate to Core Scientific, 61 million. Cypher is 130. Look at CleanSpark, 187. Look at Marathon, 131. You look at Riot, 135. Now that is at the current hash rate. So we start looking at what the projections are. If all these miners were to achieve where they're going to be at the end of December 2024, it then sort of like, because generally, if you start announcing things in the future, some of that gets built into the share price. You're going to announce something like that. So I've also put that on there because that gives you then, something to start thinking about. So again, with Cypher, they're not raising their hash rate significantly. I think it goes up to 9.3 in the third quarter of 2024. Their big rise is in 2025, but I haven't gone to 2025 because the numbers for some of the miners are like, a bit like Tesla's rocket. They're going to the moon type thing.
And it's hard to know whether
so and we could have a half an hour conversation on who's going to make their target in 2024, and that's going to be an interesting podcast. I think we'll do that in the next few weeks and look at all these targets and see actually who do we think is not going to make it, who's going to be the first one to budge. But looking at this now and take into account that they're all going to achieve where they're going to be. Cypher it's still $107 million per exahash if they get to 9.3. CleanSpark comes down because at the moment the 17.3 exahash are going to 32 exahash. So you can see that reduction there in their sort of like cost of exahash down to 101 million. Core Scientific, at the moment they're only forecasting I think 21.9. They're already over 20 exahash and I feel that target's going to be increased. We had Adam on the podcast. He was able to tell us that there's a bit more things they can do. They've had some real benefit in Q1. So likely that they've got this site 72, this site expansion of 72 megawatts. That should give them at least 2.5, getting close to 3 exahash when they gather in there. So even if you take the most pessimistic view that they're only going to grow another 1.5 exahash for the rest of 2024, bear in mind they grew over 1 exahash in the last month. Their cost value per exahash is 57 million. Then you've got Marathon, who've got to get to a target of 50. That's 20 exahash between now and the end of the year. And we've already turned around. They've got the cash to do it. The current assets there, 1.6 billion. They can do it. They can do it financially. Can they do it physically? And we don't have to look back to 2022 and when the target for 23 exahash was, it took a year longer than they expected to get there. So again, significant targets. Hopefully some of these miners have learned lessons. And then finally we come to Riot, and Riot have effectively one big site to grow, and it's Corsicana. Will be there in June, and they've already started energizing there now. Hopefully every month we see some significant uptick in the hash rate, because again they're at 12.8. They've got to get to nearly 32, so they're sort of on a par with CleanSpark in terms of where they'll be at the end of the year. But they just got the one site, so they can focus on getting those sites built. The power's in play there, so it's building facilities, and I think they can do it on the grounds that Argo Blockchain built the Helios site in less than 7 months, and that was a 200 megawatt site there. And Riot will have 200, 300, 400 people working on that site to get it done. So it's not like they're having to look at 7 or 8 different sites to get to that extra 18, 19 exahash. It's one site, and they're replacing mining machines at the Rockdale facility to improve efficiency there, and also to use probably some of the facilities that have been vacated by the hosting clients as well there. So it's not like they're having to build anything at Rockdale. It's replacing machines, and machines can be replaced really quickly. That doesn't take long. So that gives you a very quick indication. I've also put in the total number of shares that the companies had at the date of their earnings, because on the front page of every earnings update it tells you how many outstanding shares there are in play. So the report itself, if you go in the report, it'll say how many shares were at the end of the quarter reported on. But on the front page, at the bottom of the page generally, on the front page of an earnings report, it will tell you as at the date of the earnings report. So in the case of some of these miners this week, those were the number of shares. And you can see, if I can remember Riot and Marathon back in 2021 where they had less than 100 million shares each. And you can see now that's like, nearly 3x the amount of shares there. And bear in mind, these companies, had significant share prices in 2021. Both of those companies' share price went to $80. And people still say to me now, are they going to go to $80 again? The challenge is if Marathon go to $80, which is, over four times their current price today. That gives them a $20 billion market capitalization. Market capitalization, will take into account what your earnings are. And I'm afraid the earnings, even though they were great in Q1, they're nowhere near that would get a company to $20 billion of value.
Well, and Anthony, just to put it in perspective, say they had 100 million shares at $80. Now they've got 300 million shares. You'd need to be at like $240 on a split adjusted basis, which who knows what could happen. But obviously, it's a long way from where they're at. The other thing I was going to say is getting to 50 or 100 exahash is one milestone, but they've also got to make that operational month in, month out, right? Getting 50 exahash of machines plugged in is great, but if you can still only run 18, 20, 30 of them on a consistent basis, which is what we've seen from a lot of these miners, as they get bigger, their operational hash rate as a percentage drops. Doesn't really do you a lot of good if you've got a lot of machines that aren't hashing. So it'll be interesting to see. Now let's get into questions here, Anthony.
I'm gonna be quite brief on the answer to the questions, so we get as many questions as possible. So I'll try and stick to like 20 seconds per question and really get through it, because we've given a lot of time in the last few podcasts. So let's go quickly on this one.
Yeah, and we'll try and get through them. If you guys have any super urgent ones, throw them in the super chat. We'll answer those ones first, but we'll do kind of a speed question here for you, Anthony. So I've got a few of them flagged that were coming in a little bit earlier. So let's talk about CleanSpark first. This is one we didn't do an interview, just obviously too busy, but they did come out with earnings yesterday. They were supposed to be aftermarket. They came out pre-market. Then they came out with that announcement aftermarket. So maybe they just wanted to spread them out a bit. What did you make of CleanSpark numbers there, Anthony?
Yeah, I mean, we spent half an hour in the first part of this podcast talking about all those mining companies. Great numbers for the quarter that they report on, which is quarter two. The challenge now what will quarter three look like, because if you take away the FASB rules, they made 7 million net income. So yes, they're in a good position. They were mining profitably in Q1. What's it going to be like now the rewards have been reduced by 50%? They'll be looking to get that hash rate up, because the hash rate means that they'll gain more percentage of the global hash rate, means more Bitcoin mined, means their overheads will be spread against more Bitcoin, and therefore lower their cost per Bitcoin, which is the key element. So nobody can question the sort of the growth that CleanSpark's had since October last year, when it was valued at 600 million and it's just shy of 4 billion today. That's phenomenal. They're growing. They're getting their hash rate in there. I'd probably say that they've got a really a good chance of achieving it. However, in 2023, they set the stall out early in the year. I think it was 22 exahash, got reduced to 20, got reduced to 16, achieved 10. So miners can have difficulties, but they've in 2024 they've got back to where they said they were going to be, and this extra 4 exahash now is going to be on top of the facility they've got at the moment, which they've got facilities to get to 20. That's 24. They need to find sites or expand sites for a further 8 exahash, and they've got 7 months to do it. Yeah. So but as I say, we spoke about the earnings. I think the earnings were fine. Q3 is going to be the challenge.
For sure.
If it's a challenge for CleanSpark, it's a challenge for everybody.
Yeah, exactly. CleanSpark's down 3% right now. It was up 7% at one point today, so a lot of price action there. Unmodded Jeff, you mentioned enterprise value to current hash rate looks expensive for CleanSpark. Yeah, it does, but just keep in mind there's a reason for that, right? Those calculations, they don't take in execution, leadership skill, energy costs. Look at Costco, for example. Costco is it's a perfect stock, but it's trading at 51 times earnings. I was just looking at it the other day, Anthony. There's a reason these companies, NVIDIA, there's a reason they're expensive, right? So that's why we say just take everything with a grain of salt.
Yeah, they pleased the market. As I say, this last 6 months, getting that big strides in growth of exahash. go back a year ago and you had CleanSpark and IREN at the sort of like, battling it out at the same sort of levels, like, and it's now, they've seemed to have just gone into that sort of like top group really quickly and sort of like basically put themselves, in terms of, obviously market capitalization, they're in second spot at the moment behind Marathon. And there was arguments that, a month ago, would they overtake Marathon? And it really depends on production. Production's going to be a challenge. If there's any slip ups in production, it's going to affect you. It's going to affect your market cap, your share price, hence your market cap.
Well, it totally will. Yeah. Next one, Anthony. Question about DMG. This is one of the smaller miners. We just had the team on, CEO and COO, Sheldon and Steven, on talking about. Actually, we spent quite a bit of time talking about their PayPal partnership, their Core Plus strategy. For those of you who aren't super familiar with DMG, Core is essentially their self-mining Bitcoin division. Core Plus is all their software enhancements, pretty much anything non-Bitcoin mining. A lot of opportunity there. Anthony, maybe you can talk about their knowledge base. DMG, although it's a smaller miner, they've really got a lot of knowledge in that company. They were actually involved in setting up a lot of the pools as well. So they run a lot of the back-end operation on the blockchain as well. What's your take on DMG?
Sheldon's one of the most experienced operators in the space. End of. If you want to know people who were there at the very start, Sheldon Bennett's name would be in one of those names. They do everything. They not only self-mine, they used to host as well. They built the Mara pool, they built the Terra pool. They build facilities for other miners. So Sheldon, helped with the design and build of the Bitdeer facility, which is 400 meters away from the Rockdale facility, down in Texas. So you can throw a cricket ball out of one facility to land in the other one. It's that close. He was. I'm not saying he built the site, but he was there involved when they were designing that site because he's got a wealth of knowledge. They build containers for Bitcoin mining for other facilities. Part of me feels sometimes that can be a little bit of like you're slicing yourself in across everything and not really taking advantage of anything there. For me personally, unless we see these revenues coming through from the miner pools, and we'll get to see their accounts later in the month of May, we'll need to see some uptick on the revenues we see from mining pools, what the revenues are for these other associated services that they provide, and is that impacting their ability? Should they be focusing on the Bitcoin mining and, as we've seen with a number of other miners, also focusing on, because you're great at data center management, looking at the HPC side as well, which 80% of the miners are now doing. There's only 3 or 4 that actually have said they're only going to focus on Bitcoin mining, but the rest of them, that's probably like getting towards 20 of the miners, are looking at HPC as a secondary revenue, and in some cases it looks like it's going to be the first revenue. If Bit Digital keep growing their HPC, they only mined 43 million in Bitcoin last year. They're already starting to get to a contract with 100 million by the end of 2024. So that could be their sort of like primary focus going forward. And it might be the same for a number of other miners. This might be the opportunity how some of these miners go forward is by.
And I asked DMG about HPC, but like you say, Anthony, it feels to me they've already got enough on their plate, and it does.
They've got a lot. They've got a lot on the plate. They're doing so many things. I just hope we start seeing the revenues coming in. I mean, I've looked at they show me the software that they've got to manage their mining machines. So it tells you which mining machines are all working optimally, which ones need cards replacing. It's phenomenal. It's called Helm, and it's really good. But can it be sold? The rights to it sold out, utilized by other miners like that? What's that looking like? Is the time and effort going into some of these things driving a significant revenue in the future? Is there an expectation? And at what point do we say, we need to now focus on this? So the challenge will be is what can deliver. That's what we need to see.
Reminds me of our famous quote, Anthony: if it doesn't make dollars, it doesn't make sense. And it's just like the mining at a loss, right? It's good to have. And I will say DMG is definitely on the forefront. They seem to always be a couple steps ahead. It's just how do you monetize these ideas is the big one. And Anthony, that's a really good segue, actually. This question here just popped in. So talking about other streams of revenue, obviously HPC is one of the big ones. What one gets you guys most excited other than self-mining? I'm going to go first here, Anthony, because I've got one that's really interesting. I really like the Ethereum staking wheel strategy that Bit Digital has. Essentially what Sam does, they mine their Bitcoin, they convert it to Ethereum, some of it, then they stake their Ethereum. So they're consistently getting, obviously, interest, very attractive interest on that Ethereum. Then they buy more Ethereum and it just goes into the cycle. I think it's a nice way to have capital work for you on your balance sheet as opposed to have it sitting in Bitcoin. However, if we see a big spike in Bitcoin, Anthony, maybe you want your money there instead of Ethereum. That one was at least the most interesting for me. How about you, Anthony? Alternate revenue streams.
Two that spring to mind, and actually both by the same company. So we had Bitdeer on the podcast. I like their cloud hash rate. Effectively, it lets retail investors go in there and you can purchase hash rate, and you'll effectively you're paying for the mining machine. You're not having to physically mine in your location. Bitdeer will do that on your behalf on their facilities, and you have an agreement with Bitdeer. So you pay for the mining machine, you pay for the energy, and then there's some sort of like an agreement for hosting or profit share. And Bitdeer says that it's especially in bull times it's great, works well for both, and it's great for their revenues. The second thing is when they announced they're going to start building their own machines, that was game changing for me. I mean, a mining company to say we've had enough of paying these rates for other mining machines. We know how much the chips cost. They've got a contract with TSMC. 80% of the cost of a mining machine is the chips themselves, and they've put out a first generation miner which has got an efficiency of 18.1. Now they announced this a couple of months ago, the Seal miner. God knows what the Seal miner generation 2 looks like, because if 18.1 is the first attempt at this, then it's only going to go one way. We've seen Canaan today. So Canaan have announced yesterday in Hong Kong at the Bitcoin Asia conference that they brought out their latest machine, which is 18.5 joules per terahash. So Canaan, one of the big three, have brought out their flagship machine, which isn't even as efficient as the first edition from Bitdeer. Now Bitdeer will initially look to use that Seal miner if they can get the production levels up there. And I'm thinking because Bitdeer are based in Singapore, they've probably got a lot of ties to all that Asia area there, where they can probably look to get production done and get production done relatively cheaply as well in probably some of those countries there, where labor rates aren't as high as maybe some of the European or the US countries that would pay for. So if you can produce these machines realistic price, you get the benefit. So they've said they're going to look at replacing their own machines first. If the price of machines go up like they did in 2021, and bear in mind they went up from for the S19s it was like $25 a terahash, and then to 30, then to 40, and some mines were paying 80 to 90 by the end of 2021. Stronghold and Argo Blockchain both paid over $80 a terahash. Machines at the moment are sort of 15, 16 for some of the high spec machines. We've seen CleanSpark, I think they paid $16 for the S21 Pro. If those prices start to spike, because if the Bitcoin price takes off, there's a correlation between Bitcoin mining price, the Bitcoin mining companies who make these machines, the Bitmains and the Canaans and the Micro BTs, they'll want their money as well. They'll want to get a share of the money, so the price will spike. That puts Bitdeer into a really good position, because then not only will they make them for themselves, they'll make them for the market, and they'll get the margins from the market at that point in time there. So it's going to be that for me. Those two were interesting, and I see where you come from on the Ethereum, but Ethereum's it's not a massive revenue driver for Bit Digital. No. We saw in the last monthly update, I think they're only getting now 1% of what's 1% per month. So it wasn't a significant amount. A few months ago, it was like 4%. So, but it's still revenue that goes into, growing their Bitcoin hash rate. So, all very positive.
Yeah, very interesting. A couple questions here, Gary. We're not going to even get anywhere close to European football championships because Anthony will be spending the whole rest of the conversation talking about that. So we're not going to talk about football. What we are going to talk about, though, is Anthony, Riot. So comment from Eugen, Riot in the dumps. This is one I've seen a ton right now across the board. Now, there's two ways to look at this, right? There's a reason Riot share price is low. It obviously in the stock market, you want to buy low, sell high. They've had some inconsistency. They've had some challenges. They've had some inefficiencies. They've had very little hash rate growth over the last couple of years here. They've really backloaded this into this year and Corsicana. And Jason put it very interestingly, Anthony. He said they're basically running a 50 exahash company, but they don't have 50 exahash of revenue yet because it's all coming online this year. So that's the one standpoint is Riot is low. They've had some struggles. Who knows if they can execute on Corsicana? Prove it to me. On the other hand, Anthony, if you look at their future enterprise value to future hash rate, they're looking extremely good. Jason is a seasoned operator. Riot's had a ton of history. This is a world-class facility. They just have to power it up. So which camp are you in, Anthony? What do you think about Riot right now? Is this an opportunity or is this one that maybe you don't want to touch right now?
I think 2024 has to be make or break for Riot. You think about where they're going to end up at the end of the year if they meet their target. We're going to have to start seeing effectively 2 exahash going on every month between now and the end of the year. So, they're at 12.8, 12.6 on the April update. We know they've energized Corsicana, and only a small amount of miners have gone online. They're going to be ramping that up. So we need to see at the end of May. If we're not seeing, 14, 15 exahash at the end of May, and then maybe, getting 17, 18 end of June, everything then takes longer. So, it is real make or break time. They've got the ability to do it because it's on one site. They need those mining machines at Rockdale. They need about, I think, the 7 exahash being put into Rockdale to replace the 4 exahash that doesn't work, or doesn't work very well. I'm not saying they're not put because they're going to sell those machines. It's just that they just aren't able to get the best use out of them there. So they're going to replace those with 7 exahash of micro BT machines, which are the high-end spec machines there. So that should really be unplug, plug back in, get that facility over 15 exahash. And then the remaining exahash comes from Corsicana, one site. All your build employees on one site, building out those facilities, getting the immersion plugged in, getting the machines up and running. So I want to be seeing every month at least a 2 to 3 exahash increase going forward from now to meet that target, because that's the simple maths. They've got to do that. They've only got 7 months left. And May updates are coming out in about 2.5 weeks' time.
Yeah, make or break. I think that is the quote.
I think they can do it. I think they can do it because they've ordered all machines. They've got. You can see the updates to the facility now. The facility now is starting to grow quickly. We saw them. I mean, they broke ground 2 years ago. I reported on it 2 years ago in an article for Compass. When they broke ground there was like 7 of them with the shovels, and I was, I did an article on that, 2 years ago. So, but now you can start seeing the updates. They're coming out and they're doing their own videos. Riot are very much, getting a lot of information out there. Yeah. And actually, if you were to give Jason, marks for vigor on that podcast, he'd probably score a high 9. He was he come across very positive. Unfortunately, I wasn't on the podcast myself, but I was able to re-watch the podcast, and
he's an upbeat, positive, excited guy.
He's very positive. He wants us to get there and look at the site firsthand. I think this is the thing they're waiting for now. It's just that everything's going to fall into place. Get the hash rate up there. Forget 2023. 2023 was good in some ways, but in production ways was an absolute, a shocker for a company. Yeah. And 2024 could be the turnaround, get them back into where they should be. closer to getting to that number one spot, and it's up there for grabs. Then that number one mining spot's up there for grabs. There's no one out. No one deserves it at the moment. It's up there for the taking. So it'll be interesting to see how that goes by the end of 2024.
Definitely. Yeah, maybe he had a Red Bull mark. Maybe it's the poker face. Who knows? But I thought he was very confident, composed, and I do think they can execute. I have a lot of confidence in Riot. Now, this question, hold on here, guys. I wanted to ask one about Unmodded Jeff here. So it talks about FASB and the impacts of this, Anthony. Maybe we can dissect this a little bit. So Unmodded Jeff, help us understand if we're not interpreting this question right. So essentially he's saying with FASB, these aren't realized losses or gains, right? So regardless of what you post in Q1 or 2, you still have the Bitcoin on your balance sheet. You still have that exposure to Bitcoin. Whereas the other miners, they have to sell monthly. Now, where I don't understand this is if they're posting a profitable quarter, chances are the miners selling daily would also be having a profitable time through their daily sales. But in general, Anthony, what I'm seeing here is we've got the large miners that are pure play Bitcoin maxis, right? You've got the CleanSparks, the Riots, they're hodling, the Marathons. They're 100%. They don't want HPC. They want to mine as many Bitcoin as you can. We had Riot, Jason last say, we want to be a Bitcoin company. We don't want to be an energy company or an infrastructure company. We're a Bitcoin play. I love that. I'm a Bitcoin maxi. I love that. I also have exposure to Wolf and IREN who sell daily. I think that's a great model and there's a lot of opportunity there. My approach is to spread out the risk and bet on both horses. Which do you like, Anthony? What do you think about these FASB rules? Are they just smoke and mirrors?
No. And actually, the question there's a really good point to make. I mean, yes, we're only looking at one quarter, and because they made significant income in that quarter there, it's going to take a lot to overturn that throughout the year. What I'm saying to you though is when you come out one quarter to showcase your position, and then the following quarter, I guarantee you now, the next quarter, these miners will be sort of saying, here's our 6 monthly or 9 monthly position, rather than the 3 monthly, rather than the 1 month, 3 monthly position, the quarter itself, because if the Bitcoin price doesn't go above 70,000, you're automatically looking at sort of an impact from the FASB of unrealized losses against the Bitcoin value. So you are taking some of that income you were in the first quarter. If you're looking at quarters together, you're losing that potential. And yes, it's most of those mining companies from the slide we showed there were like 200 million in net income. It's like that's going to take significant to overturn that. But I'm thinking of like institutional investors who want to go into this space and what they're looking for companies to invest in, and they're looking at saying 1 minute you've got this amount of green, high levels of income. The next minute it's red. What's the next quarter going to be like? And is this something that, as an institutional investor, I'm going to get? I'm going to get a really good return consistently. If I put my money into, I don't know, say Apple or Amazon or some of these big companies, selling their wares or their business, I get a return. It'd have to be something that really impacts the economy to stop people buying iPhones or using Amazon for their deliveries.
Well, and retail, I'll say, Anthony, retail investors, some of us like risk, right? We know this is a highly volatile, risky reward.
This is why
Wall Street doesn't. Wall Street does not like uncertainty.
This is why it's predominantly retail. It's predominantly retail in the space, and those mining companies that have institutional investors, a lot of the institutional investors are those that are having to buy stock because they have to buy the basket of stocks on the indices. So, absolutely.
Yeah, very interesting. And the index thing is a whole nother discussion there as well. Now, Anthony, we had a question about Cypher. So in their earnings call, Tyler discussed the possible M&A activity. Now, we also asked Rob Chang, similar question, would you ever be open to a merge? I know you talked about these public companies acquiring each other and the premium built in, so we don't have to open up that can of worms again. But do you think we're going to see general consolidation in Q2, or do you think this is going to take longer to happen?
I mean, in years to come, it might be that there are only so many really big players, and therefore they've effectively, we saw the merger with HUT and USBTC, effectively the merger of equals. and they created a seven. I mean, the valuation is 700 million. That company now. Bear in mind, Hut 8 in 2021 valued at 2.5 billion. So as a single entity, so that tells you how far they've come down to, in that period. You will. It's possible you could see some mergers, but I mean, can you imagine the conversation between Tyler and sort of like Zach from CleanSpark and say, like, who's going to run the company? What's my, the point about mergers is you effectively, you want to cut down your overheads, you want to cut down costs. So you can't have two CEOs and two CFOs, two of everybody. That's the whole issue is about you save a whole load of management costs straight away. You're running more lightly. The reason we're saying there's going to be less companies in the future is because you want to make sure you're running lean as in not paying out, all your discretionary costs, are going to be, the labor costs and your travel, your entertainment, your sponsoring, all them sort of costs there are discretionary. It's great when the Bitcoin price is rallying. Wait till we go into the bear cycle and see how things change for some of these companies.
Well, and for the CEOs, it sounds great till one of you is out of a job, right?
Yeah. And so, who knows how long this, I think we really need to, this industry is so junior in terms of these mining companies, 6 or 7 years, the oldest miner. So we've got another 120 years, 116 years left of mining. So it's going to be, I'm probably not going to be around when we get to the end of the Bitcoin. I'll tell you that now for no measure.
I was going to say, are we going to keep running the podcast for all 100 years, Anthony, or are we going to just taper out here at some point?
I'm probably around for the next 80 maybe, but not 100.
Good. Well, you may be around for 80 years, but I don't think we're going to be around much longer today, Anthony. We've run it for an hour and 20 minutes, you guys. We were targeting kind of in that neighborhood. We'll be back next week. We've got another 5 CEO interviews for you, so a very busy week. Make sure you guys get your questions in. If you're still watching the stream, hit the like button, you guys. Really helps get this content to other people. Make sure you join the channel. Leave a comment in the section below, and we'll make sure we get to it next time. Anthony, any closing thoughts here before we wrap up?
No, just to reiterate, obviously great results for that quarter, the January to March period there. We're going to get a stack more results coming out now between the end, and I expect all these results to be predominantly green. It's going to be interesting. I think we'll wait to see what IREN and TeraWulf bring out in terms of have they been profitable with a net income position in that quarter. That will give you some indication there. But I'll tell you now, in April, the miners that sold on a daily basis were achieving an average of about $66,000 per Bitcoin, and the ones that hodled at the end of the month booked in something like $61,000 per Bitcoin. So if you'd have sold in the month of April on a daily basis, you were achieving 5,000 more Bitcoin per Bitcoin sold. So it's all. I mean, we said before, there's no one best strategy. There's an equal and opposite argument for each way, but I want to see those two sets of numbers coming out there. I expect the likes of DMG, they'll bring out a positive. They brought out positive net incomes last year when other miners were bringing out losses every quarter.
The smaller miners, and I'm just looking, Anthony, Soluna's up 9%. They had a day this week up 30%. Yeah. Soluna, SATO, and
I'm baffled with Soluna. I don't know. If you take the time to read the presentation, listen to John on the podcasts, just do that. Don't listen to me. Do the due diligence of that company and see what they've got. It's not just a self miner. They've got a whole and they've now put 2 megawatts into HPC. 2 megawatts is a significant amount.
For a company of their size,
Bitdigital are running 50 million off 3 megawatts, so it's a significant amount. That company's valued. I don't know. It's valued at less than $10 million.
Well, and shout out today, up 9%, and the only other green ones, Anthony, on my whole list are SATO Technologies, DMG, and Soluna. So it's the small Canadian miners getting it done today.
Good shout out for those 3 miners. But again, everyone just have a look at some of these. Do your due diligence. We're not here to say which stocks to buy. We don't give you any price targets. We don't give you any Bitcoin price targets. We let all the is it Rex Finance? Let him do all those sort of like predictions, and then we'll bring him on the show, and 3 months after he's done them, and sort of like go through and say, how did you think you did on those predictions?
Hopefully it's not to replace you if Bitfarms gets bought out. I said, hopefully he won't be coming to replace you if Bitfarms gets bought out. Exactly. Hey, you guys, thanks so much. Fuelman, I appreciate the TeraWulf comment. We haven't seen any Wolfpack comments today, guys. So next time we'll be on the Wolfpack. Have a great weekend. Make sure you go back, check out our interviews this week if you haven't seen them. They're available on the podcast as well if you want to just listen in. Anthony, thanks so much for the charts today, buddy. I know they take a lot of work. Greatly appreciated. And we'll see you Monday for another interview.
Yep. And just finally, all the podcasts are on Spotify, Amazon, iTunes, as well as YouTube. So I listened to the right one on Spotify the other night. Great interview that you did with Jason. Clear, very, really good podcast. Lynch, I was driving back for a concert. So check them out on there as well. We're getting some really good numbers on those podcasts there. So all formats.
Amazing. And this comment, this is where we'll wrap it up. We love Sebastian. He's obviously very smart, but that's exactly why we don't do price targets, you guys, because if they don't come true, then we're in trouble. So no price targets here.
Bye, Bitfarms.
Okay, have a great day, you guys.